Okay, this is the daily money-making setups on the S&P E-mini using the 1500 tick bar chart in the processtrading.com right edge trading system. So we know that there's three types of trades. There's trend trading, where you use the process trading VWAP line. There's counter trend trading, where you use the process trading contrabands, these white bands here. And then there's discretionary trading, where you use the discretionary indicators down here to help take your trade. So today we're going to look at the discretionary trading. This is where you get involved the most because it is your analytics of exactly what the system is telling you that determines if you take the trade or not. So the first one that I want to show you is this dot right here. Now, this is a discretionary trade simply because the VWAP was yellow. We can see that here. Let me move this over a little bit. The VWAP was yellow, and then it turned gray. Right where this bar is, that is the VWAP is gray there. That's what makes this a discretionary trade. But you can see that the VWAP was yellow, gray for that short time, and then yellow again. So you wouldn't be remiss if you said, well, I'm going to trade this as a trend trade, so I'm going to use the trend trade management rules on it. And that would have you getting into this trade because the VWAP line is yellow. Now we know that it's gray right here, and so it's a discretionary trade. But if we're going to use it in the trade management system as though it were a trend trade, the VWAP is yellow, which means we'd have to have a timing alert dot below the price bar, which we have right here, and that in the high of that bar is 88.50, which means we would have to get in, place our order to get into the trade at 90.50 because we place it 2 points above the high of the bar with the timing alert dot, and the concept is to buy into strength. So let's see where that would be. Right in this area here. Right at that bar right there. You would have got into the trade at 90.50, and you would have went up here to this dot here. You would have went up to that point. If you got out at the exact high, you would have got at 94, so that's 3.5 points. If you didn't, you would get out here because the bar crossed the stop exit line. So that's your place to exit at. If you did that at the exact low, that would be 92.25. So that'd be 1 3/4 points. So either way, it's a successful trade. No matter if you got out at the exact high, timed it that way, or you let the system take you out. Well, you let the system take you out because there's rules to it, and the rule is that when that bar crosses the stop exit line, then you should exit. So that is our first discretionary trade. Our second discretionary trade is similar to our first discretionary trade in that it mimics what we would do. It mimics it because price approached the contrarian band here, the contraband, where you can take contrarian trades or counter trend trades, but it didn't reach it. So this is not a true contrarian trade. On a true contrarian trade in the process.com right edge system, price must touch the contraband or go beyond it, and then the price bars have to be structurally appropriate to take a counter trend trade. Well, let's see if all the conditions are met except that it didn't reach the contraband. Came close but didn't reach it. Well, the rules say that when you're taking a contrarian trade, that you have to have a timing alert dot, and then at the bar associated with that timing alert dot, the high of that bar has to be lower than the high of the previous bar. So structurally, we're good right there. Then trade management wise, you place your stop loss 2 ticks above the high of that previous bar. So we would have placed our stop loss at 94.50. In entering, you want to enter immediately, as soon as you can. So let's just split the difference. The high was 93.25, 92.25 was the low. So let's say you got in at 92.75. You got in here at 92.75. Well, you can see that it never hit your stop loss, and you could have stayed in this trend all the way down to here. So at 92, actually you could have stayed in down to here, but system-wise, it crossed the stop loss line right here and closed above it right there. So you would have been out right around the bottom of this point, this bar here. So let's see where that is. That low is at 80.85. So you would have been in from 92.75 to 85. So, you're going to take, depending on where you want to get out here, you're going to take 4, 5, 6, 7 points out of that trade. The next trade that I really want to talk about is this dot right here. Now, this dot occurs at 14.42. It is a dot above the price bar, and the VWAP is gray. In order to take a trade to the downside with the VWAP, and the VWAP is gray, then you must have a timing alert dot above the price bar. So we have those conditions met, so we can place our order entry as a trend trade here. This is not a discretionary trade. This is not a contrarian trade. This is a trend trade because we're trading with the trend of the VWAP. The VWAP, the process trading VWAP is gray. It says the trend is down. So the timing alert dot is above the price bar. We look at the low of the price bar associated with the timing dot, and that's 84.75. That means we would place our order entry at 82.75. And let's see where that would get filled. If we placed our order at 82.75, it would get filled right down here. And then price takes off. So we would have got filled down here, and price took off. And even if we got out with our stop exit line, it's over here someplace. So the system doesn't work every time. Or does it? So let's look at a couple of other factors associated with this timing dot. Now, you have 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 timing alert dots. Well, I don't even have to do it that way. I was just going to tell you that these bars build at an average of 2 to 3 minutes, 2.5, two and a half, or 3 minutes. So you're looking at around 18 minutes there that you're waiting to be filled. So let's see what time. That's 1442 to 1501. So that's about normal. That's around 18 minutes. But during that time, you're still analyzing, is this going to be a good trade? Well, several factors come into play now. So you've went with a trend trade going to the short side here. Now, let's look at the other factors that would tell us stay in this trade or exit the trade before you even get filled. For one thing, we're going to look at these blue professional bars. You know, we took this trade here, and we took it all the way possibly down to here, but we took it down into this area. This is where we got out of this trade because of this bar. These are blue professional bars. It's the professionals taking or following price down, really. They're not causing the price to go down, but the professionals are the ones that are making money. And they're going along for the ride, and we want to go along with them, so it's going down. We get in over here. So now we start looking at that. When we see all these professional bars stacking up, we know that that's going to come to an end at some time. And we're looking to see where is that end going to come in. Well, that is one thing that gives us a cautionary tale about these, because it's not going to be professional blue bars down forever unless something cataclysmic is happening. So this is a long run. Remember, if we took this as a contrarian trade, it regressed to the mean then. That's where the VWAP serves as a regression to the mean line. It regressed to the mean and dropped below the mean. So now we're going to the downside. Is it going to continue? Well, we took our trade here according to our trade management rules, and we're in it here, but we don't get filled to down here. When we look at our VWAP line itself, we see right here a white area. And the way that you read the VWAP, it says the trend here, the downtrend, is normal when it's gray. When it's red, it's extended. And when it's white, it's overextended. So right in this area here, actually, price is overextended. Well, that would be a place where you can say, oh, well, that is where these professional bars are going to stop, because it's got to an overextended point. You don't know that for a fact, but that is a normal conclusion that you can draw, because you're wondering, when are these professional bars going to stop? Because like night follows day, it's going to go back up at some point, because they're making money on the way down and they're going to make money on the way up. So we looked at that. Now, as we got in here, if we stick with the upper half of the chart here, two things jump out at us. The less skilled traders are right here, these yellow bars. And these less skilled traders are getting in right here because they think the price is going to keep going down. Well, that's a good sign right there. If those aren't blue bars, those aren't the professionals, those are the less skilled traders, and chances are they're getting caught, which is exactly what happened. They got caught here thinking price was going to go down, and then it goes back up. Okay, so we have that situation. We have the white overextended portion here that gives us some caution that we're not going to keep going down when it's already overextended going down. We have the blue bars, a fair number of professional blue bars that we know are not going to keep going forever. As a matter of fact, we're wondering, when are they going to stop? We have the less skilled traders coming in over here. And then lastly, in the upper portion, we got in here on the strength of this timing alert dot. But when we got over here, we got a timing alert dot that was below the price bars. That doesn't mean that you can take. That's not a trigger to take a long trade here. But what it does is it has an effect on your reading of this dot. You're saying, oh, you know, because it does show strength. You're not going to get a timing alert dot unless there's some strength to it here. Even this one had some strength. That's these green bars right here. And that's the green bar right here is what took us out of our discretionary trade that we took as a contrarian trade. It got us out right here. So now we have a timing alert dot to below the bars. So that's going to give us another pause from letting our order get filled here. But let's continue. Let's see if there's anything else. So we've looked at the things on the upper screen, upper half of the screen, but let's look at the discretionary indicators. What are they telling us? Well, it just jumps out at us immediately. We got in right here, right at this point here, and we placed our order entry 2 points below, which was right at this line here, just below these dots. That's where we placed our order entry. So here's where price was when it signaled us that you can take a short trade. And then when we get over to here on the Intergy, we see that Intergy itself, the supply is starting to weaken. The bars are going up. And not only that, we got a trend dot. We don't know really now what direction that trend dot is going to take. We can assume it's going to go to the long side because supply is weakening in Intergy. But we want to be more certain than that. But at any rate, the trend dot should give you another pause. So you have one reason to have pause here, the blue professional bars. 2, the overextended condition. 3, the less skilled traders coming in. 4, you have the timing alert dot on the opposite side of the bars because this is underneath the price bars. 5, you have Intergy going up. 6, you have a timing alert dot. And now we're going to go down and we're going to look at the cinnamon oscillator. And we know that the way the cinnamon oscillator works by nature is it goes from high to low to high to low. It'll keep doing that over time. So it had gone from the high right here, actually where we got into our contrarian trade. And I wanted to mention that too. Let me pause my other analysis for a second here. When you had this bar that broke down below the stop exit line and actually structurally set up like a contrarian trade, one of the reasons that we could take that is because we had this overextended blue portion. When the trend is up, the yellow is normal trend, the green is extended, and the blue is overextended. So we have a blue bar, blue professional bar, coming down below the stop exit line just after it reached an overextended position, plus you had the blue bar and you had the momentum line cutting down through the top of the oscillator, the upper bound of the oscillator, and cutting through the sentiment line. So those were the reasons that also allowed us to take that trade. So going back to this one, we're looking down here now at the sentiment oscillator, and it has come all the way to the bottom. At our point, when the trend said we could take a trade to the short side, it was right here. And it's continuing to go down. But by the time it gets over here to this doji, it had actually cut above. The momentum line had cut above the lower bound and had cut above sentiment, the sentiment line. Now, this doji wasn't low enough to trigger our trade. And you saw that the sentiment line itself had reached a bottom. So it's not going to keep going down and down and down. It goes from the high to a low to a high. So this shows actually some weakness. Now, it can go for extended periods below that. That's true. But it's with all these other indications that are not in our favor, this is just one more, and this might be the kicker that says, no, I'm not going to be in this, because most of the time, 99% of the time, when the momentum cuts through the sentiment line, that's the direction that the price is going to move. And now we're starting to suspect, where we suspected up here that this trend dot meant that it was going to go to the long side, we suspected, even because of the energy lessening on the supply side and going towards the demand side, we're starting to suspect it even more, because momentum itself is starting to go above the sentiment line. So by the time it gets down here, and we don't just get in these trades and walk away, we keep monitoring them to see if the conditions are still favorable to our analysis. In this case, there's just too many that are not favorable to our analysis, and so we would exit from this trade. Not only would we exit from this trade, because of these dojis and this line and this bar coming above the stop exit line, and the other indicators with the trend dot, the positive energy coming in, this cut coming up above the midline here, all those would tell us to go long. Now, there's another thing too. One last thing I want to say about this. Let's put this vertical line on. This will show where everything is. That's it. That's right at that bar. That's at the bar where it told us could go long. Well, when we look at our global indicator, this is the broad market. When we look at that indicator, okay, we see that it was coming off of a bottom. It didn't go back down to the bottom again, right at the point that where our dot is. In fact, it just reached here and went back up. So this is not showing that the supply is so great that it looks like it's going to take it below our oversold indicator. Next, when we go down to our 30-minute bar, you can see that right at that point, the line is here is a white color-coded volume bar. And remember, the white color code means that price is going to move down or it's an end of a down. Well, these two white bars told you the price was going to move down, which it did, and then it got to this long red candle, and then it finished off here, and this white bar told us that price was at the end of the down. So now we're getting in even more reasons to say, well, we want to be very cautious with this trade. And lastly, this is a 1500 tick bar chart, and this is the 750 chart. So we can watch that And right over here, we can see at 15, right there at 1500. Okay, so let me turn this off now. That on the 1500 bar, we also had on the cinnamon oscillator, well, actually, the 750 did not help us that much. So at least it didn't help us by telling us we're wrong. So one of the indicators didn't. But we had 4 there. We had like 3 down here. We had the broader market telling us that the supply and the weakness was really starting to diminish. And then we had our volume bars that give us another cautionary signal. So all those together, we would have been out of this trade at least by this bar. And this bar, this doji right here, did not go low enough to get us in. And remember, this doji bar took like at least 2 minutes to build. So you would have had, if you weren't convinced by everything else and got out by this time, you'd have those 2 minutes. But really, you had 18 minutes of watching it, seeing that the signals were turning, and you would have got out here. So, in fact, this was a trend trade to the downside. You were able to place it in, but the system told you in a number of different ways that this was going to be a very, very challenging trade if you were to take it. So you would have exited it before that got filled. So those are the trades I wanted you to look at today. I wanted to explain how to use the VWAP, the overextended portions of the VWAP, the professional bars, the less skilled traders, how the timing alert dots might have some offsetting indications. And when you look at the energy, the diminishment of it, you get a trending bar. You want to figure out which way that's trending. The cinnamon oscillator going down helps us figure out that trend. It's at the bottom. This is even the momentum, even though it's below the bottom of the indicator, is sloping up some. And right here, before this bar, it cuts through the bottom and the sentiment line. And then you have the volume bar. So all in all, those are the trades for today. A couple good trades. One trade that didn't work out, which was this one. But if you traded with the system, that's the way the system worked. It got you into this trade, let you place your order, and then it got you out of this trade. Because remember, when we were putting our order in for this, when we're going short, we want to sell into weakness. Well, everything was starting to tell us the weakness is dissipating. So we would have been out of that one. So we would have had a couple good trades and been out of that one. So that's it for today. Those were the setups. I hope you were able to catch those with your trading system. If not, subscribe and to this, and you'll get these analysis every day. And if you want to go over to processtrading.com, there's a great blog over there. A couple great ones called the E-Money Minute that'll explain more of how this process all works. Or if you're trading stocks, it has a Stock Money Minute that will explain how the system works for stocks. And if you want to follow those blogs, just put your email down in the contact form at the bottom of the page over processtrading.com and make a comment like blogs or something like that. and we'll make sure that you get those blogs on every time they're posted. So hope your trading goes well, and you have a great week, and see you on the next video.